is June 20th, and I'm sitting at pretty much an all-time high, about $75 off. This is the video log. It takes 30K to a million, and I have doubled my money now in a little bit less than a year. Yeah, I've added some cash here and there, but it's a lot of gains. I'll show you in a second. After I give you a quick summary of the account, show you where I'm sitting at right now, I will tell you why I'm employing the strategy that I am. Alright, so here we go. Today, it was a very good day for me. It shows negative $75, but it's just the way the options work on Robinhood. The way it ticks, it's actually not. It started at 6,072, and then ending up at 60,000 and almost 600. So it was a good plus day, $500 or so. And I think the last time I made a video was at 58,000. Now I'm 60, and I'm cleared the 60 mark, and I'm really happy about that. What I'm even more happy about is that I'm beating the market, right? So if my weekly performance is 3.5, and the S&P 500's performance for the week is 2.22, almost double. Let's see for the month what I'm looking at here. It is 8% for the month, which is a very, very good number. 8%. Let's see what the SPY says for the month. It is 3.46%. And finally, let's take a look at 3 months. 3 months is 6.28%, and 1 year is a very high number, 30%. So we're not even going to look at the 1 year. Obviously, I'm beating the market by quite a bit. But 3 months is 6%. I just to take a look at how I'm doing lately. And 3 month here is 4.79. So just a little bit, not maybe beating it by a third or so, so not too much. Now, I'm really happy about that because that's one of my major goals, is to beat the market. All right, that's what I'm really care about with this account. Otherwise, anything I do really doesn't matter, right? Because you could just put it in SPY. You could just put it in an index, S&P 500 index, and set it and forget it. And so you wouldn't really have to bother actually learning anything about investment. So anyway, so that's why I measure myself up against the market. I think it's a really good measure for any investor to do. Like, if you're not beating the market over a long period of time, I understand maybe a year or two you have off, and that's totally fine, but over a long period of time you got to be beating the market. Otherwise, you got to rethink what you're doing, in my personal opinion. All right. Okay, I'm really tired, so if I seem a little loopy, my bad. It's 12 a.m. right now. Just had a hard couple of days of work. Okay, so let's take a look at the account real quick. Sitting at a huge position of Apple. However, I've sold the call against the Apple shares for the most part, so I'll end up selling them at 200 if Apple finishes over $200 per share on January 17th. Okay, but for right now, it occupies a really big portion of the account. The next largest is PCY, which is emerging market funds, and then Russia ETF, wheat and precious metals, uranium, global ETF, and short-term treasuries. So the bonds, emerging market bonds, and the short-term treasuries are ready to deploy towards either EXK or more Apple if there is a crash or a drop. I also have this SH fund, which is negatively correlated with the S&P 500, which I'm going to sell if the market drops, so I can buy more stuff, including market-related stuff. So I have quite a bit of downside protection at the moment. We've had a pretty good rally, made some money in the last week. As you can see, it's $2,000. So feeling really good about that. Protected somewhat to the downside. Obviously, if the market does drop, so will my account, but not by much, hopefully. I'm even beating the market on the downside because of the placements I've made. If we look at just today's gains real quick, EXK is up $117. Apple 131 for my account here. We had a laggard. Main was down $18. Other highlights is the Russian market up $74. Unfortunately, my gains are capped with the Russian market. Should not have capped them, but you never know. So if the Russian market drops now, I still have the call sold against it, so I'll benefit some from that. If actually, let's take a look at it real quick. So as you can see, I have sold a call against the Russian market for $23, expiring on July 5th. And right now it's at 23.82, so 100 shares of that will be sold, and I'll only have 38 shares left. All right, as you can see right here, the value of my I have $94 liability, and the value of the call has increased to 94 cents, so that's $94 total. Because as always, every options contract is 100 shares, so we have to multiply its price by 100 to find out what the dollar amount is. So I'm losing $44 today, and total return is $75 lost, or 394%. Luckily, we're dealing with small dollar numbers, relatively speaking, so it's not too much to worry about. Okay. Interesting numbers here. So moving on from Russia, we have wheat and precious metals, which is up another $90. And I've also sold a call against wheat and precious metals, so should it fall and correct, it won't be that big of a loss for me. This is part of the reason why I like selling calls, to collect some of the gains and mitigate some of the losses here. So similar story as the Russian market when it comes to the figures. 24.38, I have a $24 call, and the price has already surpassed that. So I'll end up selling 100 shares of wheat and precious metals on July 12th, and I'll be left with just 33. No big deal. If it keeps going up, those 33 shares will still give me some gains, but not as big as if it was 133. But I gotta sell at some point. So selling through calls is a good enough way to sell for me. And I'll talk about why I do options in a moment. Why I sell options. So uranium, energy fuels gave me $60. So happy about that. And then lastly, URA another $70, Chemical $34. I actually have puts and calls sold against Chemical, so the gains are even higher. The emerging market bonds, again, $37. Let's take a look at Chemical for a second, all right? So I have puts sold, a $10 put sold, so it needs to be over $10. It needs to be below $12 because I have a call sold against it as well, expiring on July 19th. So far it's doing exactly that, and Chemical is by far my favorite stock. And I mentioned this almost pretty much every episode. Favorite stock to sell options against. All right, and so taking a look at Apple finally, the biggest player of the portfolio here, the account. I have erased some of my liability. It's no longer $5,000. It's $4,550. Here are the prices of the options. I've sold 2 puts and 1 call, and you can see my collateral here that I have held up by Robinhood. It's $40,000 and 100 shares of Apple. So these numbers don't mean as much anymore. You know, the total. Whenever you have options in play, the numbers, absolute numbers, don't mean as much. All right, you have to combine the option with the price of the stock. So you can see all the negative and positive movements for the options contracts themselves up here. All right, well, why do I like to sell options? And I like to sell options for income now because I'm working off from a premise. All right, so what I've noticed is that we should have been at the end of a business cycle, right? At a couple years ago, when we had a bull run of like 8 years or something like that, one of the longest ever. We are currently, I think, one of the longest, if I think the longest bull run ever in U.S. history, and we should have had corrections, but we haven't. And part of the reason for that is the central bank, is the Federal Reserve, is the fact that they will always, they've learned their lessons, and they're now with the finger in the trigger, excuse me, when it comes to supporting the markets, and they're very concerned about the markets because they know that so does go the market, so does the economy and everything else, and public perception, and they're gonna lose face. So they really don't want to repeat mistakes that are made in the past. So they're gonna be extremely cautious not to let the market drop. So I know that, and many other people do too. And it's the Powell put now. It used to be the Yellen put, and before that, it used to be the Bernanke put and the Greenspan put, and which means that the markets are going to be going higher and higher and higher and higher, and the central bank is not going to let the market have an enormous correction. And even if it does, it's going to pump the system with so much liquidity, a la 2008, that it's going to skyrocket up again, even in the face of negative sentiment. Okay, so I'm working from that premise. It was proved in 2017 that this is what they're going to be doing, but there's the market is so overvalued, the stocks are so overvalued now that it is very, very difficult to push the market higher. So I've pulled up this S&P chart here, and I made this call somewhere around here in the beginning of 2018 that markets are going to be moving sideways for the next 10 years. All right, 10 years. And as you can see here, so far we're 2 years into it, and they moved exactly sideways. They've gone nowhere. Now, I didn't say exactly sideways. I said that they're going to move sideways, but only in real terms, not in nominal terms. In nominal terms, it's gonna go higher by a few percentages a year, whatever the rate of inflation is. All right, and that's a rough estimation. It's not exact. But if there's no big moves, how is one to make money in this market? The only way, a sure way to make money, is to take advantage of the time passed in a sideways manner. Usually, in markets, you can make money when the markets go up, when the markets go down, but when the market goes sideways, there's no money to be made. So people try to always chase what's volatile, try to chase the hot new IPO or whatever moves so they can make money. But you can make money from the market in a sideways market over the long period of time by taking advantage of the time value of money. So that's why I sell options, so I can gain the time, right? So an option is a depreciating asset that loses value over time. So if I sell it now and buy it back when it's a much lower price, I get that difference in money. Or I can just wait for it to expire worthless to zero. And even if my collateral gets triggered, right, I still end up with some kind of trade that I would have made anyways, like purchasing a stock or selling a stock. So I'm really not that worried, even if it doesn't expire worthless. I just want to make sure that I'm taking advantage of time. I even pulled out money, right? I took on debt in order to do that. So I'm giving away interest, so time value of money, to someone else, but I'm collecting a higher value from the options, and I'm collecting the difference, and that's the plan. All right, so that's the plan, and hopefully it pans out in my favor. We'll see. Of course, on top of that, I'm well diversified. As you can see, I have all kinds of stuff. I have international stocks, I have local stocks, I have metals and bonds and all kinds of stuff that's ready to move around as the market moves around. So that's the strategy for this account, and it's a money management type of style. It's not a hot trade type of account. I'm not loading up on Bitcoin and watching it go to the moon, right? It's nothing that um, is so luck dependent, all right? So this will have to be maneuvered with skill, right? It's not just like, oh, I happened to pick Amazon in 1997 and now I'm just sitting on it and collecting, you know. It's not like that. So anyway, that's enough rambling on. I've updated your account. I'm sitting at 6,589, which is an all-time high, at least on the videos here. Um, I was a tiny bit higher a little bit earlier, so it's not the exact high, but it's all-time high close. So with that said, I'm excited about tomorrow. The gold and silver have had an absolutely enormous breakout from the 350 range. Gold broke out above it. I saw it at 14.11. I think it's come down to 15 or 20 bucks so far after, but it's just a monstrous move. So a lot of the miners have gone up. I have an account with the gold miners, which is looking very good at the moment because of that. And so EXK is still kind of lagging though. It's just a little bit above $2. So I'm gonna wait for it to go up quite a bit more before I start scaling out. If you watch some of my other episodes, you know that I like to scale in and scale out of EXK as a way to make money. So it's sitting at $2.01 right now. And my last purchases were at 178, 188 over here. So I'm not really in a rush to sell my EXK position. I think that it's gonna be going quite a bit higher at this silver price, or even a little bit below. I would value EXK at around 270 or 280. So if the price of silver stays put for another week or two, I expect EXK to catch up to that number. And once it reaches over 250, I'll start scaling out probably 100 shares a pop or more. All right, so that's the EXK strat. I've updated you on the price, updated you on the options, told you a little bit why I'm so keen on taking advantage of the time periods, and talked about my call. So we did quite a bit. I just wanted to update you real quick, but I actually talked quite a bit. So with that said, I think I'm gonna end it right here, and I'm looking forward to tomorrow. Hope you guys are too. Peace out.